How to write off your home office without getting audited. That's what we're going to be covering today. Hey guys, Mike again from Ledgerly, partner, CPA, alongside my good friend Andrew D'Amico, also a CPA. That's a 2-in-1 package, my friends. Here to bring you the latest and greatest tax strategies, how to roll them out in your business, your personal life, and achieving greatness for your family's name. If you're loving the content we're putting out and love saving money, keeping it in your pocket and not giving it to Uncle Sam, make sure to bang that subscribe button for weekly videos on some awesome tax strategies. All right, cool. The home office. What needs to be understood here is that this is for business owners. Let's remember back in 2016, when Trump came into office, this is one of those deductions that went away for individuals with a W-2 job. It used to be reported on Form 2106 on your 1040 tax return. That's no longer currently available to W-2 taxpayers. However, we don't know what's down the line. So we're only talking about current rules, current regs as of 2025. So again, this pertains to business owners. And for more case study, more regulations, visit irs.gov. And topic 509 has some pretty good bullet points on what it means to deduct your home office. But the general rule of thumb is if you're a business owner or if you're a W-2 employee and you have a side hustle, this pertains to you. So let's dive right into it. Deducting your home office. Generally, there's 3 ways to deduct your home office. There's the simplified method, the actual method or regular actual expenses, and then there's also the accountable plan method. And we're going to be covering all 3 of those today. So we're going to do a little screen share and work our way up from the simplified, regular method, and then also getting into the accountable plan and touching on that as well. All right. So we got a Schedule C profit and loss from business here. Now, remember, this is for single member LLCs or sole proprietorships. So if you have a side hustle or a single member LLC, and it's just you as the business owner, this is where your profit and loss from your business operations is going to get reported. So we have our income over here, we have all of our expenses, but today we're talking about home office. So the simplified method. If we're taking the simplified method, we're going to be looking here at box 30. However, there's a cap on the simplified method, and it's a cap of 300 square feet. So your office in your home can't be bigger than 300 square feet to take the simplified method. And it's $5 per square feet. So in theory, when we look at our handy dandy calculator, we have to look at 300 times 5. That's your max deduction when you take the simplified. And the simplified method is reported right here on the face of your Schedule C. So the pro to the simplified method is it significantly reduces your record keeping, having to go hunt for receipts, payments for your utilities, mortgage, all the things to keep a roof over your head and the lights. However, the significant con is you're only getting $1,500 of a deduction. So that's option 1. Option 2 is the actual method. Now, the actual method, we're still talking about a single member LLC or sole proprietorship on Schedule C. We have an additional form to fill. And that form, the 8829, expenses for business use of your home. So essentially, up at the top here, you're going to plug in how big your house is. It's going to calculate a percentage, 10%, 15%, and so on. And then what's going to happen is we're going to go all our expenses here, our deductible mortgage, our real estate taxes, our utilities, our home insurance, repairs and maintenance, the whole 9 yards, the list goes on. Now you can see this opens the door up to a lot more deduction and a greater deduction than $1,500. But there's also a lot more record keeping and documentation to keep in mind. So that's option 2. Option 3 is the accountable plan method. Now, the accountable plan is something that Andrew and I talk about all the time. It serves on a different purpose and a different podcast. But right now, we're only going to be going over the home office piece of the accountable plan. Now, the accountable plan can be implemented in option 1 and option 2 as well. The reason that we need to roll out the accountable plan in option 3 is because we're assuming that we have elected S corporation status for your business, and now it's a separate tax return. And one thing that's not on the S corporation tax return is the home office bucket, is line 30, expenses for the business use of your home. But if I'm a business owner and I'm allowed to write off my home office, why can't I do it on my S corp? You can. And that's where a lot of CPAs and tax preparers, they back up and they get, oh no, you can't take home office as an S corporation. No comment. Let's talk about the accountable plan and how to really maximize your tax savings and your tax deductions. So would come over to our S corporation. Yep, there's no home office bucket. However, it's going to fall into other deductions. Attach a statement. And in that statement, it's going to be accountable plan, home office reimbursement, or whatever it might be as an employee reimbursement. Because now, as you are the business owner, you're also the employee. So you're getting reimbursed for your business use of your. So yes, we don't have the home office bucket. Yes, we don't have the 8829. However, what we even have that's better to help audit proof is a nice handy dandy spreadsheet. This is our accountable plan spreadsheet. And let's walk through something. Let's walk through a couple months of how you'll track it. You're going to put your company name. I'm going to put in Mike A, the CPA. Sorry, I guess I'm no longer a part of life. We'll get a laugh out of that. Shareholder name. I'm going to put Mike A. Calendar year. We're in 2025. So let's do a little square foot. Let's go based on, let's say, my home office is 250 square, and the total square footage of my home that is livable is called 12.5% of all my expenses. All right, let's do a little easy case study here. Let's say I don't own, let's say I rent still. So let's say my rent per month, rent ain't cheap anymore. Call it 4,000. All right, and let's drag that across the whole year. Yeah, let's say the winter months, it gets cold in the winter, 300, 350. Let's say April, it goes back down to 250. May, let's say we're at 200. June, 100, 90, 80. Let's go back up to like 95. And so October is going to get a little cold. Let's say November goes back up to 250. And then December is, it's getting colder too, 275, right? Same thing, electric. Let's call it, 130, 150, just making numbers up. Now, these are like the utility bills that you'll get from we are in Connecticut, so we have like the monopolies of the world here. I'm sure, wherever you guys are watching this, but you're going to have your utility bills and you're going to pump these numbers from your utility bills in here. Okay. So, we're just kind of going down the list. Let's say 350, maybe the AC's cranking, the electric. Sometimes my bills are, goodness gracious here. Let's go back down September, 200, October, 150, November, 125. It's going to fluctuate, guys, 200. Water. Sometimes water is just a steady bill during the entire year. So let's call water like $30. Internet. I know we pay for cable and internet. So Wi-Fi and also cable that might be bundled, right? So I know we're probably paying like $170 a month for cable Wi-Fi. Pest control, we definitely use that. It's about $150 a month. Okay, let's say you're part of an HRA. I'm all hung up on the tax strategy here. HOA. I hope you're not a part of one of these. No, bad experience. HOA. All right, insurance could get pretty pricey. Let's call it $250 a month. We'll drag it here. Property taxes can also pretty expensive. But if this person's renting, they probably don't have property tax. And then let's say they just have some little maintenance of $50 a month. What this spreadsheet is telling our total monthly, I'm going to go over here and just make a total. All right, so our total monthly spend of all these utilities, I go total sum, paying $61,000 in home expenses. But of that $61,000, this individual can take $7,600 and reimburse themselves out of the business. So if they write themselves a check out of the business bank, and then it's going to fall under this line item, other deductions, attach a statement. There's going to be the statement. So if you guys like this spreadsheet, there's even more in the spreadsheet that we're not going to go over. Accountable plan, Augusta Rule, Board of Advisors, all that fun stuff. If you guys like the spreadsheet, drop the comment home office in the comments and we'll get it. All right, let's take it back. Big step back. A lot of awesome information. But let's just recap this. The home office is one of our favorite deductions to take, and it's left on the table more frequently. And if you're CPA or tax preparer is saying, nope, it's too aggressive, you can't, then I think it might be time to find a new tax advisor. And that's why we're at Ledgerly, is to give you guys these types of tools to help implement into your business rather than leaving these tax dollars on. So as always, do your due diligence, do your research. And if you love these resources that we just went over, again, comment home office in the comments.